And a bit of a rebound coming in yesterday, so we're back at 17,150 thereabouts. But again, the big trigger happens tonight when the US Fed is going to be meeting amid all the drama around SVB, Signature Bank Collapse, Credit Suisse, UBS deal. Rates clearly are a very, very crucial inflection point. Also looking at all the macroeconomic data points. So yes, Fed is going to be publishing an updated economic list of projections as well. And I think that is what the market is going to be now deriving its cue from. Very, very critical a juncture when the Fed is meeting.
You can argue both ways actually.
Yeah.
So what will Fed do? Let's break it down. If they increase interest rates, that means that they're confident that the US system can absorb a rate hike. The financial system is solid.
Strong enough, yeah.
But if they're increasing rates, that also means that they are worried about inflation. And they expect that inflation is going to be extending itself for next couple of months at least. So in the short term, you may argue that that is an endorsement that the financial stability is getting endorsed. But in the medium term, that also means that inflation reading will be strong and banks will have to further, US banks will have to further deal with mark-to-market losses. But if they cut interest rates, now, are we supposed to celebrate or are we supposed to get worried? Well, my sense is that if they cut interest rates, that is also an indication that somewhere they feel that the US financial system cannot digest any more rate hike and the US banking system is becoming fragile. So this is one of the phases of the market where you want Fed to come out and increase rates and indicate that they're nearing the end of the interest rate hike and the US financial system is stable. The word confidence, stability, assurance, and the Fed comes and says that, guys, we've got your back. I think that is something what markets want.
In fact, just looking at the priority right now for the Fed, Nikunj rightly highlighted, it's whether there's inflation or a systemic risk. Is the Fed going to at all talk about all the big banks and what's going on with them at all or not? And I think that is also something that the market is watching out for. Health and stability of the financial system, risk of a contagion, deja vu from 2008, as is much talked about. Is the Fed going to talk about any of these phenomena? That is something that remains to be seen. Also, you've got ECB as well, wherein they've hiked the key interest rates by 50 basis points last week. So this is coming in the backdrop when pretty much all and every other central bank, barring Japan, is still pretty much on an interest rate hike trajectory.
Yeah, so ECB is endorsed, has increased interest rates. They've come out and rescued Credit Suisse. They are indicating that the the European banking system is stable, and I think that is getting captured in the way global financial markets have moved. There is no panic. There is hardly any red. There is a lot of green. And I guess the operating word, at least this Wednesday morning, it's a Wednesday, yeah. It's Wednesday morning, is that global markets are stable. There is a degree of short covering. And there is this whole fear that world's going to go down and US financial system is going to collapse and European financial banking system is going to fall apart. At least that's getting addressed. For me, I look at uptick in crude, stable crude prices, and SGX, which is indicating that we could be in for a boring, stable, but a calm day.
Okay, so at least when it comes to the consensus, it seems to be that majority is working with a 25 basis points rate hike. All right, nothing but calm. That was how the markets shaped up yesterday. Yeah, the pullback was evident. We did manage to surpass the 17,100 mark. And mind you, it was a follow-through coming in across the board. Even when it was the broader markets, they did manage to hold out by about 0.5% or so. But do remember that the FII net shorts, they continue to remain above 90%. While the F&O premiums are back near the normal range, you did have a lot of the heavyweights that really showed their might in yesterday's trading session. Remember, we've been alluding to the underperformance of the likes of an ICICI Bank, HDFC Bank, and even a heavyweight like Reliance Industries. But yesterday was the day when you saw that trend completely reverse and hold out quite comfortably. So a lot of support coming in from some of these top contenders. And Nikunj, what in light of this would be some of the levels to watch in light of the fact that the net shorts as well on the FII side remain above 90%?
Aman, everyone is on the same side of the boat. I mean, imagine FI net short 90%, which means either they are very bearish or they feel that they want to buy protection. But 90% net short from foreign institutional investors is an indication that how they perceive the short-term market direction to move. That's one. Everyone is on the same side of the boat. B, Nifty has managed to bounce back from a crucial level. So in the short term, the trade for a trader is to go long rather than use the decline to their uptick. And see, if I look at the narrative from brokerage, whether it is BofA ML, Morgan Stanley going all out in terms of what their India outlook is, Citi talking about that India is a resilient market and you need to be long India. I think there's a change in the narrative, and the change in the narrative is that India is no longer expensive, but it becomes a market where you want to be a buyer. The valuations are no longer as stretched as what they were, let's say 6 months ago, or even 3 months ago, or even at the beginning of the year after the recent correction. So the narrative now is that you want to revisit India on a decline at your comfort level, but you do not want to be in a mode to sell. So I think near term, when I'm talking about near term, for a trader, there is scope for a bounce. In the medium term, time to buy has started, and the rich frothy valuations which had happened in a lot of mid and small cap stocks also, that also I think is getting change. I think it's time to now start buying, to put it very simple.
Yeah, that's exactly the viewpoint coming in from both Bank of America as well as Citi as well, who are now saying that India is a buy on dips market. And the valuations are getting a little bit comfortable. We've seen that also, right, with the kind of fall in mid and small caps like you're saying, and even some of the key heavyweight large cap names, the kind of underperformance that they've had in the last 1 month. A lot is looking attractive on the table.
Yeah, 20 times becoming 17 times. You may say, okay, it's what, 2.5%, it's what, down by just a whisker? No, but in percentage terms, that's a meaningful number. And the minute you start talking about, let's say, another 1 month of correction, and then next year earnings, next quarter earnings will kick in, Indian markets suddenly will not looking expensive from a historical standpoint. But there are a lot of bargains now which are clearly available. There's a big change in the regime, and I'm sticking my neck out and saying like this because same time last year it was all about uptick in commodity prices. Now it's all about downtick and demand destruction in commodity prices. So the trade now is going to move from commodity producers to commodity consumers. The trade now will move from a lot of pockets which have seen pricing pressure because of high commodity prices to companies which will benefit if commodity prices they go lower. So time to fundamentally make a case that India was rich and India was commanding P multiples which were higher than the average. I think that time is behind us. You want to be a buyer in this market. You want to use the decline to your advantage. We'll talk about themes and what's the way forward. But my sense is that it's time to be a bit contra buyer here. See, if you're an investor, you'll have to treasure hunt, right? I mean, you'll have to start treasure hunting depending on your comfort level. But directionally, if you sold in the month of October, November, December, or even December and January, you've been smart with your portfolio allocation. So I think it's time to buy the fear and the nervous in the market, because with each passing day, the system is getting more and more convinced that there will be no financial crisis. That's what I think, for me, the message is.